But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Welcome back to the Junius Maltby channel. Prepare to be once again gold-pilled. Glad you can be here. We've often taken stories like this, examined them, looked at them, and tried to apply them in our own ideology in saving with precious metals, wealth preservation. And it's good to look at examples that are current, that are going on around the world, and take it as an example of, well, perhaps could this happen here? What would we do? How would we prepare for a similar situation in our own economies or with our own currencies? And recently, there's been some significant events and drama with the Turkish Lira. We've discussed it and mentioned it in the past, only briefly, though we've never really dived into it. But as of late, things have become a little bit worse and developed more so, and I decided this evening to make it the topic of conversation. So we've got a couple of articles here, and at the end we'll follow up with some Bank of England information. There's a lot of information taking place out there with gold outflows and supply and ETF gold, things like that. So we'll just touch on that quickly as well. So tonight is a gold-specific discussion, so buckle up, get gold-pilled, and maybe cuddle up with a few of your favorite bullion ounces as you listen to this and sip from your Junius Maltby mug. Here we have a headline. In Turkey, locals sell their cars and houses to buy gold while the lira implodes. So bear with me as we narrate this story. Editor's note here from Nick Stamatakis, obviously a Greek. As Greece, the U.S., Europe, and others are trying to deal with an increasingly problematic Turkey, led by an authoritarian leader, President Erdogan, they cannot underestimate the impact of the dire economic circumstances the country is facing in the past few years, as their currency is imploding. Erdogan has refused to ask for help from the IMF. He is still proud of leading Turkey out of it in the start of his career, almost 20 years ago. Makes you wonder if the IMF is possibly punishing him for leaving. I wouldn't put anything past those shadowy powers that run the world economy. Erdogan, managed to go by using band-aids from Qatar and a few other willing states. Recently, he is trying to negotiate a financial assistance memorandum with China, while at the same time he is making an attempt to turn the Turks' attention abroad by attacking Greece and other neighboring countries. But it is now clear that his final demise will come from the economy. So all of you world leaders out there, whether you're in the EU or the United States, Canada, Australia, New Zealand, could your demise come from your economy and not from other means? It has been a miserable 5 years for Turkish citizens who have seen their purchasing power slashed by more than half, and it's only getting worse. The Turkish lira has cratered against the dollar in most developed currencies, plunging from 3 tri per dollar to a record low 7.37 last week after a brief and valiant attempt at imposing shadow capital controlled by Erdogan, who is now de facto head of the Turkish central bank, failed miserably at the end of July, and not even a draconian hike in overnight funding rates above 1,000% last week to crush the shorts was able to prevent a plunge in the lira to new all-time lows. It almost looks like a dollar chart right there, but as you can see, the lira plunging in its purchasing power. As their currency implodes in a nation that is becoming increasingly more, quote, banana with each passing day as Erdogan solidifies his takeover of every government institution, in the process turning off any potential foreign investors, pause, inject Junior's commentary here. I thought that governments taking over industries and institutions and managing the economy and plunging interest rates or manipulating interest rates and all of these things was supposedly a good thing. And you'll see later on when they talk about reserves, I was told recently banks don't need to have reserves. So again, I want you, as we go through this, to question the narrative of the Western media outlets, their criticisms of Turkey and the way they're handling this, and even Erdogan, regardless of your feelings of him. I don't know the guy, I really don't care. However, it's just always, to me, a little bit hypocritical when judgments are passed on nations like this as their economy implodes and their currencies implode and hyperinflation takes place. Because many of the same things that are exercised, many of the same measures employed are done by Western economies, the EU, the United States. It just so happens that the Fed and the Treasury, the United States, the IMF, the Bank of International Settlements, and the European Central Bank, they happen to be the head mafia on the block, and you're not going to deal or do things without their permission. They get the cut, and they get to manipulate the currency. They are the ones allowed with the monopoly of currency issuance and the world reserve currencies and the ability to control the economies. And if you don't get their permission and don't play by their games, well, you're out, and they'll crush you. So just keep that in mind. But I do believe that the rules that govern economics, those very rules that are eroding and destroying the lira and that are destroying Turkey, causing people to rush for gold, are the very same rules that can be applied and will have the same effects here in the United States and in other similar Western economies, Canada, Australia, New Zealand, the European Union, all of those nations. So just keep that in mind, that you're not immune to this just because you're white. You don't have some particular privilege because you're in a Western country, because you happen to, live with the red, white, and blue and NASCAR. That doesn't mean you're immune to these economic laws. The destruction of a currency and the meteoric rise of gold as its replacement can happen anywhere at any time. Turks are discouraged from material purchases of dollars to hedge the collapse in their native currency due to some of the strictest capital controls on the planet, which has left them with just one option. Ooh, but we have capital controls here in the United States to prevent people from buying gold. Isn't that something? As Reuters reports, Hasan Ayhan followed his wife's instructions last week and took their savings to buy gold at Istanbul's Grand Bazaar as Turks scooped up bullion worth $7 billion just a fortnight while their currency went up in flames. It sounds like Hasan Ayhan's wife was quite wise. Maybe she tunes in here to the Junior Small P channel. Here's a goldsmith at the Grand Bazaar in Istanbul, Turkey. The retired police officer, hit by vivid memories of the 2018 currency crisis, which saw the lira lose 30% of its value virtually overnight, was among those playing it safe as he cued in the city's sprawling covered market, where a screen showed the gold price rise by 1 Turkish lira in just 10 minutes. Now here is a chart showing the price of gold in lira. I know that last statement about it rising, 13.66 cents in 10 minutes or so, really not a big deal. It's not a specific thing I would look at as being a major rise in gold price. I mean, we see it here in daily trading with the U.S. dollar rise significantly more than that in 10 minutes time. I've seen it jump $10, $20, you name it. But this here is your typical gold chart for any currency as it's been going up in all of them. However, this is what it looks like when a currency's dying. And this is the kind of chart. Just replace the word lira in there with gold in dollars. And that's what you have to look forward to one day. It'll almost mirror this, I'm sure. There you see it crossed the 2,000 lira mark. Then it hit 4,000, 6,000, 8,000, 10,000, 12,000, 14,000 lira. And it's peaked out there at the top. You can see it around 14,316 lira. Again, this is what a currency in its death throes looks like. Right now, with the U.S. dollar, we're seeing it breach that 2,000 mark. No one can create a logical, articulate base or argument on why this cannot happen to the U.S. dollar or to the euro or to the pound. Of course it can. There's absolutely more data and evidence and metrics to point to the fact that this indeed can happen to any currency. As a matter of fact, there isn't a currency on the planet that has been immune to such action and moves when it comes to its relationship and ability to be exchanged for gold. So here it is, death of a currency, the lira, losing its purchasing power as measured in gold, the ultimate money, the ultimate extinguisher of debt, the ultimate preservation of wealth. What's more, it now appears that locals are choosing gold over the dollar, perhaps because the dollar has also been tumbling against gold in recent weeks due to the Fed's overt attempts to debase the greenback. Quote, "I think it is the best investment right now, so I converted my dollars to buy gold," unquote, the 57-year-old said, adding, "I might withdraw my lira and buy gold with it too, but I am scared to go to the bank right now because of coronavirus," unquote. I would risk it, my friend, being that you only have a decimal 0.00003% chance of dying from it. I'd go get your money to buy gold because you're most likely going to lose your wealth before you ever contract and perish from the COVID. Well, Hassan, for people in Turkey, it is the best investment, but there is a rather high chance that Erdogan pulls an FDR. Could Erdogan go as far as to become as evil as FDR and make it illegal for anyone in Turkey to own gold? So you and your fellow countrymen may want to have a series of unfortunate boating accidents in the coming weeks. Just hide it and lock and load your Arkansas kangaroos. In any case, the day after Ayhan bought his gold on August 6th, the lira hit a historic low and has continued to slide, laying bare concerns that Turkey's reserves have been depleted by market interventions, which are showing signs of fizzling out, even as the central bank and president flood the local airwaves with fake news about monetary stability and urge locals to keep their money in lira. Pause once again. So obviously this gentleman made a significant, brilliant strategic move in purchasing gold, because shortly thereafter, the currency cratered even worse. It died. But I want you to focus here on this, because this is going to happen here. Remember, governments always do the same thing. They all have like the same playbook. They all go to like dictator kindergarten, and when they're playing with their dictator blocks and they have their dictator recess, these are the things they talk about and learn. And it is this. They flood the local airwaves with fake news. That happens every single day in the United States and abroad. Fake news. And about monetary stability. Remember all the fake news about monetary stability that Benjamin Bernanke and his friends and Hank Paulson and President Bush did during the last financial crisis. And even today, with the major economic crisis we're experiencing now, we see tremendous amounts of fake news regarding monetary stability. And then they urge locals to keep their money in lira. Well, recently we've seen the Fed and the Treasury urging locals to get rid of their change, to make their bank deposits, to not withdraw cash or money from the banks. All of those things. And of course they urge us to believe that the economy is doing so much better. The numbers are great. We all know that's not true. I was going to talk about that tonight, but I don't even have the time. All I can tell you is the United States economy is being bombarded. It's under a mortar barrage right now. It's being destroyed. So hunker down, and you'll see more of that to come in the fall, and we're definitely going to talk about it. But just know, this gentleman here in Turkey is smarter than 99% of the Americans out there right now. He's probably smarter than 99% of you Brits in the UK or you Australians or Canadians. This guy made a brilliant strategic move, and he's better for it. He moved his lira into gold, and then the lira died. Only this time it's not working. Turks have traditionally used gold as savings, and there may be as much as 5,000 tons of it under mattresses, with more added after the recent buying spree. Mehmet Ali Yıldırımtürk, deputy head of an Istanbul Gold Shop Association, said, and although gold has never been more expensive in either lira or dollar terms, vendors at Istanbul's Grand Bazaar said almost no one is coming to sell their gold jewelry. There are only buyers. And this is something we need to look for in the United States and abroad also. You'll know it when it happens. When no one is selling their gold and they're only buying it. And again, the next step is no amount of the fiat, no amount of the currency you have can be exchanged for any amount of gold. When the people that are selling gold or have gold to sell, wherever that may be, refuse to part with it for the currency you hold, you are then up Chocolate Creek without a popsicle stick. I've been chatting with hundreds of people who are thinking about selling their cars or houses to invest in gold, said Gune Gunes, whose busy booth is near the market's entrance. Putting the recent gold buying frenzy in context, in just the last 3 weeks as selling gripped the lira, local holdings of hard assets such as dollars and gold jumped $15 billion to a record of nearly $220 billion, making a mockery of the central bank's attempts to halt the currency slide. And here you can see an image of a gold dealer, Gune Gunes, selling gold for Turkish lira. Those are some pretty awesome looking coins in there too. Looks like they've got some big ones there. That middle one looks like it could be a 2 or 3 ounce coin, and then you've got a lot of 1 ounce and looks like half ounce and quarter ounce pieces there as well. The good news is that according to Reuters, so far there is no evidence suggesting people are about to pull savings from banks, and this week the lira has hovered around 7.3 versus the dollar, although it remains among the worst emerging market performers this year. Demand has eased since Turks withdrew some $2 billion in hard foreign cash from their banks during a March through May period in which a lockdown was imposed and the lira hit its last low, according to central bank banknote data. Also, be aware there is a significant move as well into cryptocurrencies in Turkey, and Bitcoin apparently has skyrocketed in its value in Turkish lira, of course. But that will surely change should the free fall in the lira accelerate. Indeed, analysts say that if Ankara cannot boost confidence in the currency, which has fallen almost 20% this year, import-heavy Turkey risks inflation and even a balance of payments crisis that will worsen fallout from the coronavirus crisis. It also guarantees even more weakness for the lira and even more buying of gold. And a good point to pull out of this paragraph is, just because you're seeing non-inflation reported or inflation not really taking place in other goods in the economy does not mean the currency is not dying dramatically and that its value in gold is becoming wider. As you can see here, they mentioned that really inflation hasn't really hit. However, the currency is still being plagued and people are still rushing to convert their currency into gold. Gold dealer Gune Gunes talks to Reuters during an interview at the Grand Bazaar in Istanbul. Meanwhile, with foreign investors now having only a small stake in Turkish assets, after the government's authoritarian approach has spooked many of them away, it is critical for President Tayyip Erdogan to convince Turks and local businesses to stop turning to the perceived stability of dollars and gold. One look at the chart above suggests that's not working. Meanwhile, Finance Minister Berat Albayrak, who happens to be Erdogan's son-in-law, said on Wednesday the lira's competitiveness is more important than exchange rate volatility. The central bank has effectively borrowed on local dollar liquidity to fuel its foreign exchange market interventions, which are meant to stabilize the lira according to data and the calculations of traders and economists. Through Turkish state banks, which together are short foreign exchange by $12 billion, the central bank has sold more than $110 billion since last year, Reuters data shows. In turn, the bank's gross foreign exchange buffer has fallen by nearly half this year to below $47 billion, its lowest in 14 years. Skipping to this part right here, ratings agencies and investors say that Ankara should take decisive steps such as an interest rate hike to rebuild reserves and restore confidence. Otherwise, rising current account deficits and a possible debt default could tarnish the country's formerly solid reputation for meeting foreign obligations. Now, you would think the same thing would apply to the Western economies, raising interest rates to restore confidence, rebuild reserves, but I'm told that we don't need reserves and that zero interest rates or even negative interest rates are a good thing. Again, I don't understand the inconsistencies when it comes to an approach of running any economies. It's very interesting that the different rules apply to different nations and different ethnicities, in my opinion. We have seen time and time again, nation after nation suffer similar events to this. We've talked about it. We've reviewed history. So again, it's just very interesting to me. And as Reuters notes, these debt repayments are set to rise in October, but the locals aren't waiting the 2 months to see how the current crisis plays out. Locals don't want to keep Turkish lira. They've been dollarizing and buying gold. Turks have hardly ever done that historically, said Shamaila Khan, New York-based head of EM debt strategy at Alliance Bernstein. That is why you need proactive policies, because if you get to that stage where locals are unwilling to keep their money in the bank, then you're heading to a balance of payments crisis. That's when the alarm bells will start ringing. So look for that in your local country where your currencies are, when locals are unwilling to keep their money in the bank. I'll tell you right now, I'm unwilling to keep any amount over there outside of what I need to cover my daily or weekly expenses. Absolutely, there's no reason to keep money in the bank. You get no interest, and when you need access to it, they're going to be closed. And if you're trying to move into metals or be private about your wealth and moving your wealth, I would say that holding your local currency is the dumbest thing you can possibly do. I'd rather hold any crypto to dollars and any metal to dollars, period. I'd rather not be exposed to the fiat trash paper monopoly coupons that governments issue. To halt the bank runs, some banks imposed fees on withdrawals this week. See, get your money out before they start putting fees on it. You want to be the first one in and the first one out. You want to get your money out before this stuff starts to happen. While the central bank has curbed cheap credit channels, it had opened to ease the COVID fallout. Yet while the Lira deposits now earn more than the 8.25% policy rate, their real return is negative, with inflation at 11.8%. So you're burning money. Your money is on fire if it's in the bank. Although the percentages are different here, it's the same. You're getting 0 to 0.1% maybe in a bank, perhaps. Am I right? Well, inflation rate, they tell us, is 2 to 3%. That's their target in the United States. I would say that it's much more than that. And if you compare it to gold and the price in gold, don't look at other goods and services. The U.S. dollar plunged about 30% or more in its ability to purchase gold this year. So you earned 0.1%, but you lost in the amount of gold you would be able to purchase had you bought earlier in the year. So holding dollars has been nothing but bad decision for anybody who's holding a large amount of cash. It is just plain stupid. Perhaps Erdoganomics, whereby the president mandated to fight high inflation with lower rates in contravention of all norms and rules of economics, will ultimately end up destroying Turkey just as so many expected. Hey, who are we to judge? We're going to go with MMT by AOC and Bernie. He can do whatever he wants. I mean, they're making up economics as they go. So I don't see a problem here. Or maybe not. Traders say backdoor tightening needs to reach 11.25% to stabilize the lira, which has nearly halved in value since early 2018, sowing anxiety over diminished living standards in a country accustomed to free trade and travel. Still, Erdogan is firmly against higher rates, claiming they slow down the economy. So instead, the result has been currency destruction, because at the end of the day, one can't simply order economic prosperity. Now, isn't that poetic? You can't just order economic prosperity, and higher rates, he believes, slow down the economy. That's the same thing people here believe. That's why they do the low rates, right? Now, isn't it interesting to you that the managers and architects, those on the helm of the United States economy, do some of the same Erdoganomics that Erdogan does, and they get away with it? Not for long, my friends. Not for long. You'll see this here soon. Don't worry. This is what you need to be looking at, because this is a perfect shining example of what you can expect. Meanwhile, Erdogan shows no sign of budging, and on Monday he said he hoped market rates would fall further. Quote, God willing. Our own president wants negative rates. So him and Erdogan are in agreement on that. But firms such as System Denim, which imports some materials and makes clothes for foreign companies like Zara and Diesel, are feeling the pinch from rising investment costs. Owner Saref Fayet said he recently converted his 4% euro-denominated loans to lira at 10%. No need to take on additional foreign exchange risks, he said. Now I pay a higher rate, but at least I can see ahead. A few more headlines and articles regarding Turks thinking of selling their houses to buy gold as their economy declines. All of this recently in the news. Excessive military adventurism coupled with endemic corruption and nepotism has helped contribute to the decline in the Turkish economy, which is why Turkish President Recep Tayyip Erdogan has successfully kept his population distracted by creating a new crisis with Greece. I would like to focus on the military adventurism coupled with endemic corruption. Two factors that happened here in the United States, along with, yes, some nepotism as well. Moving on to this article, we will pause for a moment, but I just want you to look back on what we discussed. And I hope that every single viewer of this channel, each of you that's part of the Junior Small B program, those of you in the comments, those of you down below, you can take away from this an understanding that you have to be able to somehow relate to people in other countries that are experiencing something that you may not have experienced yet, but that you may experience. Witness what they're doing and learn from that. You know, they say that a smart man learns from his mistakes and a wise man learns from the mistakes of others. And I would hope that all of you see what's going on over in these countries and the pattern of behavior, the way the economy is unraveling, the things the government is doing, the decline and dying ways that a currency shows itself, and that you can make moves strategically ahead of time. Your whole goal here is to be ahead of the masses, ahead of the crowd, so that you can be on the winning end of this and eventually, if anything, survive, preserve your wealth, and come out maybe better than when you went into an event such as what is taking place in Turkey. Now here we see gold liquidity is plunging, and here's what comes next. This is a topic that we've often touched on, and it is showing itself. There is a problem in the gold markets. We're not going to read through the entirety of the article, so if you want to pause and read it yourself, I'm going to pick up right here. In July, gold ETFs recorded their 8th consecutive month of positive inflows, adding 166 tons, equivalent to 9.7 billion, and that's, I believe, US dollars. Once again, this brought global holdings to a new all-time high. Gold ETFs have seen their holdings grow by 21% in 2020. In July, they logged their 8th consecutive month of physical gold inflows, contributing to a streak of record highs. The biggest gold hoarder of them all, though, was the aforementioned SPDR Gold Trust, which added 348 tons of gold from January to July of this year. 333, oh look at that, 333 of those tons were added since late March alone. In total, the SPDR Gold Trust now has 1,241 tons of gold held with HSBC Bank in London. That's a lot of physical gold. And for the SPDR Gold Trust, it's been getting harder to find. In April, HSBC tapped the Bank of England for a major gold bar transfer. In a Q1 2020 filing to the SEC, the SPDR Gold Trust revealed that it began holding gold bars at the Bank of England, roughly 46 tons or 4.4% of the ETF's total holdings. And though an ETF procuring more gold wouldn't normally raise eyebrows, the SPDR Gold Trust's April maneuver was somewhat of an anomaly. Save for one occasion in 2016, the SPDR Gold Trust has never had to source and store gold outside of HSBC's London vault. Then, in Q2 2020, the SPDR Gold Trust published its most recent SEC filing, in which investors learned that the ETF increased its Bank of England gold holdings to 70 tons by the end of May, representing 6.3% of GLD's gold supply. And even at the end of June, SPDR Gold Trust reported that 40 tons of its gold were still being held in the Bank of England's vault. This might not seem like a big deal at first glance. After all, gold-backed ETFs need to hold large amounts of gold. However, the SPDR Gold Trust's reliance on the Bank of England implies something that could have a profound effect on the gold market, which is that there is a shortage of physical gold floating around. A shortage of physical gold floating around. In other words, the amount of freely tradable gold is dwindling while liquidity plunges. The physical gold market is very small relative to the equity gold markets, the ETFs. Of course, that's what I've always said. We all know this to be true. There is more physical gold than paper gold, making this a potentially critical trend that could have major implications for both physical gold and gold-backed ETF investors. Gold-backed ETF investors are some of the dumbest people that there could be. Just buy gold, my man. You don't need paper. If this continues, gold-backed ETFs might not be able to buy enough gold as demand surges. Physical gold would explode higher as a result, while the ETFs start to lag behind, or even worse, start to fall. I think they'll implode and collapse, similar to what we've seen in the oil ETF world. We're not there yet, not even close, but it's a possible outcome should the physical gold float drop to near zero. So while buying shares of GLD to participate in the gold boom may be convenient, it might not be the safest long-term strategy. Physical gold, or even gold miners, which is what Warren Buffett did recently, could be the better buy, especially once other investors start to recognize the gold market's drop in liquidity and begin to shift their precious metals portfolios. And by that, I mean shift to physical. Again, it's like running out of a burning building. You don't want to be with the crowd jammed up at the doors, fighting for fresh oxygen, fighting for your way out. You just want to be able to casually walk out on your own before anyone else even sees or smells the smoke. Here we are, we're telling people the building's on fire and they should leave. However, they're too stupid. They're too busy watching the movie or whatever theatrical event is taking place. You've been warned. You know what to do. You've seen it. It's happening. And now I'm going to close with Kyle Bass because it's such a great clip on exactly this topic. We've seen the death of currencies. You know what it looks like when a currency collapses and dies. You've seen the dollar charts. You know what's taking place globally with the global economy. All of it's there. The information's been presented. You know that ETF gold, they do not have it. They do not have the ability to cover the amount that is out. And it's going to cause a problem eventually. We've seen the predictions. We've talked about all of that at length for years. So here we go. Let's close out with Kyle Bass. Thanks for tuning in to the Junior Small P channel. Please like this video. Hit the thumbs up if you care to. Subscribe if you're not subscribed. And by all means, share it. You sharing these videos really helps get the word out, helps grow the channel, helps me. And I appreciate it immensely. Go ahead, drop a comment below. I love engaging with all of you down there. So drop something in, your observations, your thoughts, and take part in the conversation regarding all of these topics here. And if you care to, there's links that you can follow as well when it comes to any amount of support you'd like to show this channel. Thanks for tuning in, and have a good night.
Kyle, can you talk a little bit about gold and why at UTIMCO? Why at UTIMCO you actually took delivery of the actual gold?
So I'll give you my opinion. I won't speak on behalf of UTIMCO.
Sure.
So my opinion is very simple. As a fiduciary, which I am in that position, to the extent that you own gold and you are going to own it for a long time, it's not a trade. It costs us about 90 basis points a year to roll it through financial futures contracts. And then we went and looked at the COMEX. So the COMEX at the time had about $80 billion of open interest between futures and futures options. And in the warehouse, they had 2.7 billion of deliverables. So 80 billion of open interest, 2.7 billion of deliverables. We're going to own it a long time. You're on the board. You're a fiduciary. What do you do? Like, that's an easy one. You go get it. All right. So you go take $1 billion of the 2.7 billion and let them worry about the rest. And when I talked to the head of deliveries for COMEX NYMEX, I said, well, what if like 4% of the people want delivery? He says, oh, Kyle, that never happens. We rarely ever get a 1% delivery. So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold. And then what was interesting was we conducted an audit of the delivery. And what was interesting in the audit was they kind of resisted our audit request on the front end. And then they finally allowed us in. And we did a random audit. We had like 1,600 bars or something like that. And we just wanted to see 20 or 30 of them. And they were all over the place in different venues in the vault that weren't segregated. So yeah, it's an interesting concept. But what I'm saying is the exchange is a fractional reserve exchange, and they think price will solve everything. So that was the decision. It's actually an easy decision if you're a fiduciary.